Good morning, legends. Welcome to the start of a new week. I am so excited for this week. And you know why? Because I have a feeling that this week is going to be the ultimate test of patience. This is where the market makers teach us a really good lesson about trading. And this is where if we know how to anticipate what they're doing, then we can be on the right side of the trade. So we're going to be focusing on how to anticipate what the market maker is trying to do in today's video. Before we do that, shout out to the indicator. What do you guys think? This is the Trade Travel Chill indicator that we are currently building. It's still a work in progress, so it's not publicly available yet, but is this not the sexiest indicator you've ever seen? Personally, I think it is. Now, let's get into what has happened so far this week and then what we should be looking out for the rest of the week. If you are new here, welcome. If you are returning, welcome back. Massive shout out to everyone in the Discord. We have just cracked 3,000 members in our Discord and 9,000 subscribers on this channel, so thank you to everyone who's believing in what we do here. It truly humbles my heart. If you haven't already, be sure to hit that like button, hit subscribe, and turn the bell to all so that you can be notified every time I upload a new video. Now, let's get into this price action. Let's first talk about yesterday because we had two situations that happened. Number one was right off the bat, the Asia session opened as an actual trend into the UK session. Now, we know that Monday is fake move Monday. So was this the fake move to the upside, or was this reversal here the fake move to the downside? What we can see from yesterday's price action is that when price was moving up, every time we had a market maker's candle, so this green one here as well, and then these ones up here, we had really large wicks to the upside. So every time we pushed up, we came back down. However, in all of those attempts, we then fully recovered those wicks within the next few candles. This was the hint that the market makers were testing the upside. Once we got to this level here, however, you can see this is where they failed to break the level. Price then started to head sideways and we did not get another wick into this zone. That there is your reversal signal. So we did catch this short last night, which is just a reminder, guys, I do updates 3 days a week on this channel. Every other day we are in the Discord trading. So if you're wanting to know what's going on the charts at all times, come and join us in the Discord. Not yet though, it is the 28th of June, so you want to wait an extra couple of days because if you join now, Patreon will charge you today and then they'll charge you again on the 1st of the month. So wait until the 2nd just to be safe and come and join us in the first class tier of the Discord. We have just added live sessions trading the open of the UK and the US session. So you can jump in there, have a look at what the cabin crew are thinking and discuss what you think might happen during that session. So back to this, we caught this short, but where are we now? How do you know something is a fake move or if it's the start of a new trend? There's a couple of ways. Number one is when you do get a sharp move like this, you know that this causes an imbalance, right? Because it moves too fast and now orders have to get put in the book either side, longs and shorts, to fill through this candle, but no one's going to put their stop losses or their entries in the middle of a big candle like that. So it takes time for this area to fill out with limit orders. When you see a big drop like this or a big push to the upside, what you want to see is how fast is this zone getting recovered. The way that I usually do it is just grab my fib tool and draw my fib across that whole candle where the big move happened and then just mark out the 50% area. Because as a general rule, if price can recover more than 50% of that candle, you could make an assumption that it's likely going to recover the rest of it as well. If it fails to get above 50%, then it's likely we're going to have more downside. So at this point in time, you can see that when we had this push up right after this move here, it's failed at this point in time to reach 50% of that candle right there. In addition to that, every candle since has also failed the 50 EMA on the 15-minute time frame. Now, as I'm filming this, we have only just opened the Asia session, so we do need to wait and see what Asia wants to do. Another thing I wanted to point out was you can see here I have a line marked for Binance longs. This was a very large order of longs that was sitting in trading light, which we have wicked into twice now. We're going to double check and see if they're still there or if this is still a zone to watch. But at this point in time, whilst price is under the 50 EMA on the 15-minute time frame, I remain bearish. Let's have a look at high block. This is a very interesting chart at the moment because look how white this is. This really goes to show that the market makers are trying to induce us to basically guess the next long-term direction. And every time we think we've got it, they wipe us out. Over the weekend, we had built the leverage up for the long positions up to about 10 billion we got to at one point. And then on yesterday's fake move Monday, we wiped basically all of that out. We're currently sitting at 600 million delta to the longs, which is basically nothing. And so what the market maker has to do now is encourage retail to open more positions by making us believe price is going in a direction. The delta isn't telling us what direction they want us to pick. So therefore, we turn to this area here. And what we're looking for is where the large spikes are, because these large spikes give us an idea of where most of the liquidity is that the market maker could just give us one strong candle into that zone and collect a lot of liquidity. So immediately what stands out to me is this area here for the long positions, which is sitting at about 20,400. But for the shorts up here, there's quite a bit more liquidity currently. So we've got 20.9, 21.1 and 21.6. It may be the case that this delta switches today. So if we see more downside, it's going to encourage more people to open more short positions. We'll see that delta switch, and then we'll know that the market maker is trying to induce short positions. So does that mean you shouldn't open a short position? Not at all. At this point where price is right now, if the market makers want price to go lower, we really only have one hit to the downside. So they definitely can send this lower another 2 times if that's what they wish to do. Any sort of bearish candle formation under the 50 EMA is going to be a good level. Unfortunately, by the time I upload this particular one here is not going to be a good entry. And this railroad track here as well was a great entry. Unfortunately, too late. However, these are the kind of things that you'll be looking for if at some point we get a retracement back into the 50 EMA and fail to break above it. Let's have a look at the trading light orders currently. So we can see here, this move down last night wiped out a lot of long positions that had opened on the fake move Monday. Again, this is why it's very tricky to trade the fake move on Monday. If you're an experienced trader, you can 100% scalp it. But if you're learning to trade, it's probably better to stay away from Mondays. Now, as far as limit orders, lots of limit orders below price currently, but also lots above price. I'm really only going to be interested in the ones that are above 1,000. So I'm going to mark this out on the chart. Okay, so this is what our largest buy and sell zone is currently looking like. And if we line that up, it does look like this was the wick into that buy zone right here. So we need to see what happens when price takes a second stab. There is one option here of what may be playing out now, which is called a H pattern. Looks like that, where price comes in, stabs into the zone one time with a large wick out. What that means is that there was liquidity left behind because there were many large orders here and they didn't all get filled on that wick. And we know that now because we can see that they're still there in trading light. So usually when you see that happen, we will come back into that zone to pick up what they didn't get the last time. What happens after that? Because this is too late to take the move, right? So what do you do after these orders have been picked up? One of 2 things will happen. From here, you're either going to get another bounce out of the zone with a change in structure, so i.e. a W formation. That's going to give you an idea that this is the bottom level. And if you get that confirmation of a higher low, we're probably going to head back up somewhere into this sell zone, which ironically lines up with above the 50% line of this red candle and also the 200 EMA on the 15-minute time frame. So that's one option. Another option, if we do come back down into this zone, is that we shoot right through that zone, again, come back for a retest, and we head down to the next level. So where will that next level be if that's what happens? So we have to go back to last week into the 23rd of June to find the area of interest, which would be down around here, to recover these previous candles here, which you can see we've wicked close to once, we've wicked close to twice, but we have not yet come back into this area. So if price were to break through the buy zone, this area here at around, say the even 20,000 mark, that's going to be the next level of interest for a target. So 2 trade ideas for you there today. We'll definitely be waiting on this buy zone. Now let me hide these because I do have one more option today that I want to discuss with you. you, and that is the possibility of a break above the 50 EMA without coming down into this zone. So if price were to break above the 50 EMA, it would mean that we potentially have a W formation here. Price would need to break above the 50, potentially to the 200 EMA, come back to retest it, and then head to the upside. To me, this isn't the likely one, but it is something to be aware of because price action is a little bit hectic right now. We can't make assumptions. We have to just trade what we see. So this is one as well that I would definitely be looking out for today. I would not be trying to trade this W for me personally, just because we do only have this one hit to the downside and there could be two more coming. So you're better off to trade confirmation rather than take an aggressive entry on this particular setup, in my opinion. And so the conservative entry is going to be letting it break the 50, let it come back and successfully retest it. Only upon a successful retest would you then take a position to the upside. Now, if you are looking for somewhere to trade, don't forget to grab the OKX link from the description of this video. That link will get you 15% discount off trading fees and also up to $500 worth of sign-up bonuses. OKX is my preferred exchange, and I do have a playlist on this channel which I will attach somewhere above this video that shows you how to take long and short positions on OKX. I also have a free section in my Discord. There's no need to wait for the first of the month to join that. You can grab the link from the description of this video and jump in there immediately. There is also a dedicated channel to OKX with a lot more private videos that you can start watching immediately. All right, that's all I've got for you today. As always, I hope this was helpful. If it was, don't forget to hit that like button, hit subscribe if you're not already subscribed, and leave me a comment down below. Happy trading, and I'll see you tomorrow.